Namaskar traders, a very good evening. This is on the 7th of December. It's a Wednesday evening, 8:24 p.m. Indian Standard Time. And after a recent break from my end, sharing these updates tonight, I'm back sharing a market update, which I prefer to break down into around 7 to 8 pointers. First, we'll talk about the Nifty. We'll talk about the sectoral performances. We'll take a look at the FII DII movement. We'll take a look at the big moves that has happened in the market today. We'll take a look at some exceptional stock to keep a look at either on the upside or on the downside. What's the condition of the global markets as we record this video? And finally, what are the trades that as a community of mentorship traders we closed in today's trading session, right? So to begin with, we are looking at a triple screen as always, weekly, daily and 75-minute. The last fortnight has gone into a lot of changes at our end, and when I say our end, I mean the mentorship traders community. So thanks to community members, we have managed to design beautiful indicators, all customized for our own purpose. And so my screen might look a little different to you, but more or less the elements are the same. I'm using trend, I'm using momentum, short-term pullbacks with the help of 3-period RSI, range contraction, expansion, and final confirmation coming in from Heiken-Ashi. Well, yes, weekly, daily, 75-minute time frame, and what we have on the daily time frame is a much needed healthy correction. Remember, we had a great run-up recently. The run-up that we had, a recent one from a low to high basis, it took the Nifty up almost 4.6%, almost a 5% run-up, and now we have almost a 2% correction from a high to low basis. The correction so far has only seen a drop in the underlying momentum, which we always see in the first cut. The underlying trend is still intact in the daily time frame as well as the higher time frame, the weekly time frame. We had a great run up in the weekly time frame. It took the index to all-time highs. I saw in a few clips that people in these news channels, people were actually standing up and dancing. I also noticed that there was a timer when the index will hit a new all-time high. So I mean to say that I did notice a lot of exuberance, euphoria, excitement, and whenever this whenever this parameter kind of extends itself beyond normalcy, the chances, the odds are very high that the market will do the opposite. And as of now, that is exactly what we are seeing. So nothing to worry, because right at the top over here on the daily or on the weekly, we don't have any technical logic of a top. It does not mean that every time it has to have a logic and then it will come down. Nothing like that. But considering the kind of relative strength that Indian equity markets have shown recently, it's fair that we consider this fall as a short-term healthy corrective move in a primarily uptrend bull market. Now, can this fall further? I can see my 75-minute time frame is angling beautifully on the downside. And we'll notice that there was a gap up. There was a gap up over here. And the gap up range is around 18,560, 18,490. So yes, 18,500, 18,570, this particular gap. The good thing about this gap is it aligns beautifully well with the previous highs. Highs becoming lows is a very common classical aspect about long-term bull market charts. So yes, let's keep an eye at 18,600 down to 18,500 to 18,560. So 18,500, 18,600 kind of zone, I think, will be the immediate level for this short-term correction. So strategically, Nifty is in a bullish trend, going through a short-term momentum correction. Decent support should kick in another 100 points from the current price. Strategically, a trader should be more biased on the upside, should not look to go and try and sell contra short, because we might land up paying the price. But yes, if this correction lands up to be an ABC kind of a correction, then we will be more than happy to look for shorting opportunity in this leg down, rather than the first one, right? Sectoral performance, that's Nifty behind us. Now we can take a look at the sectoral behavior here on my right hand side. And well, across the board, most of them were negative. We can see the small caps and mid caps fell more, little bit more than the benchmark Nifty. FMCG, PSU Bank and consumption, these are the only sectors which held well. Apart from within that, it's FMCG, CNX FMCG, which gained significant grounds. On the weekly chart, we can see that FMCG is now giving us a nice structural breakout, ascending triangular breakout. Market probably decided to hide behind the FMCG. Generally, they do so with the FMCG and the healthcare, but that was not the case with CNX Pharma or the healthcare index. It actually came off close to 1%. It's kind of range bound, as you can see over here. The weekly charts are angling a little on the downside, so there is not much clarity in terms of the underlying trend of the pharma pack. So whichever way, it can actually give us a breakout, but FMCG definitely standing out. Now if I share the chart of Bank Nifty with you, it's a very interesting chart and makes me feel really uncomfortable. Is this weekly time frame wherein we notice some, I think 9 weeks of consecutive positive bars. If you consider this low to current highs, then it will be around 10 weeks. Now, so I thought that let's come here to stock charts and let's just take a look at 10 weeks performance amongst the sectoral indices. And wow, PSU Bank 40% up. The second best is less than half of it, which is CNX Metal. And then we have an improving quadrant candidate, CNX IT. Very important going forward. And oil and gas. Reliance, again, very important in this pack. And then we have Bank Nifty 11%. So clearly a huge outperformance coming in from PSU Bank. So जो पहले जोक में मारता था कि PSU बैंक चलना चालू हुआ मतलब मार्केट टॉप आउट हो गया. In fact, it's this pack that helped the market go up, and of course SBI is the key stock in this pack. Pharma, अभी हम लोग discuss कर रहे थे. We were talking about pharma. The good thing about the pharma is, according to these RRG graphs, it's in the improving quadrant. So from here, it has two options: either show some strength, give a breakout, and go to the leading quadrant. Close watch on stocks like Sun Pharma and Dr. Reddy's and Lupin. On the other hand, you just, as you're losing a bit of underlying momentum, you slip back and kind of oscillate like this. That is essentially you buy time. So pharma is essentially the biggest loser in this pack. Consumer durables has slipped into the lagging. Healthcare and pharma more or less will kind of mirror themselves. Auto, a previous huge outperformer, wiggling down to the lagging quadrant. There is an important stock in the auto pack, which I will discuss little later. It's a four-wheeler stock which can give us a short-term bounce back. And then we have FMCG, media, energy. So PSU Bank, I think, is way too stretched and one should go underweight now. No matter what the exuberance is, if we take a look at the sectoral chart of the PSU pack, that's the CNX PSU Bank, you will see a phenomenal move on the weekly time frame, extending further on the upside. Yes, a bit of peak and trough kind of a divergence, sloping up, which can mean some slowdown. But I think from a trading point of view, if you have any exposure in this pack, makes sense to book some profits, go a little underweight and use lower levels to plow back again. So from a sectoral point of view, all eyes I think will be on the FMCG. I'm interested in metal also because metal was the second biggest gainer in the last 10 weeks pack, and metal has come very close, if not almost there, to its previous swing high, all-time high. And so I feel that the index will definitely buy some time and then give us a breakout. Daily charts are beautiful in an uptrend. Over here also we do notice a peak and trough divergence, which suggests that there can be a little slowdown. There is a little bit of slowdown, we can see that. And so buying on dips counter, I would be looking at, of course, the private sector banks, the metals. Amongst the energy, Reliance plays an extremely important role. So buy on a dip or wait for the supports and then probably go for long trades. Let's quickly take a look at the FII movement and the global markets. For FII movement, I'm using StockEdge, and I can see on December 7th there has been this is DII. FII has been a mild seller of around 1200 crores in the cash segment. This week so far they have been selling, not much fancy, just a little bit of mild buying here. Month of November was a 22,000 crore buy from the FIIs, which was almost eerily same like that of August, but entire year 2022 they've been big time sellers ever. Of course DII to counterbalance that selling from the FII, but if you take a look at the trend over the last few days, the trend has been primarily on the buying side. So far so good. The little bit of correction on price reflects here that little bit of reduction. Now what about the DIIs during the last, let's say, 4-5 days? You can see very clearly helping, very strong help coming in to support the overall markets coming from DII. Now global markets, as we record this, it's almost 8:35 now. Global markets, the US markets are completely flat. S&P 500 is completely flat. It's trading very close to its previous lows, which aligns itself with its swing high. These are good levels. Couple of things that makes this chart particularly interesting is that S&P 500 gave us a breakout, which has turned out to be a failure. Whenever I find this kind of a pattern where the breakout has failed, generally the market, when it reverses, it leads to a structured correction in multiple legs. So going forward for the S&P 500, this support, will it hold or not, I think will be very important. Weekly charts also, if you can see, they are more or less aligned with its previous highs, and it's kind of overbought and it requires a short-term dips, and that's what the overall markets are giving. Nothing much over here in the European market. DAX is also topping out, had a great run. You can see the extent of the bounce back. The London market, the British market, also fairly back to its swing highs, and it's an extremely important level for the index. Now crude is at 74. It's gone through, I think, a 40% correction from the highs of 123, 41% actually to be precise. And nothing much over here. It's in a strong downtrend. No signs of strong divergences to support, but interesting levels as it comes close to its previous important fractal lows, which is around the level of 65, 66. SGX Nifty is mildly positive, 22 points, trading at 18,693. We don't mind if we get an opening of around 20-30 odd points. Now the last 2 pointers. One exceptional stock was Siemens, was one stock that beautifully turned on a dime, and yes, was a beautiful stock which found wonderful support at these levels and a big gap up and follow through movement, very strong weekly charts. So this area is essentially a lack of momentum move, exactly what we can see here, but the move was pretty good, and I think going forward from a short-term point of view, any kind of a dip can be looked as a buying opportunity. The long-term charts being so good, I think it's not a problem for any cash market investor. One should definitely continue to hold on to this stock, and maybe you can look to add. One exceptional or one interesting, I think interesting is a good word, I did share with you earlier, four-wheeler stocks, Tata Motors. Now I'm looking at the futures chart here. Tata Motors have actually gone through 5 consecutive days of fall. On a high-low basis, this fall is now almost 6%. That's a decent correction. It's a pretty decent correction. Weekly charts are not in a very strong trend, a little bias on the downside. You can see the angling of the channel here. Daily charts are all right. 75-minute time frame, this is what interests me, is this spread that I'm using here on the on this panel is fairly stretched. When we get a value like this, it should ideally stop falling, can give us a short-term bounce back or maybe a decent healthy bounce back. So contrarian traders, those who like to buy into stocks which are going through a correction and deeply oversold and trying to attempt to buy into the bounce back, I think you should keep Tata Motors on your watch list. It's at supports as we discussed. Shorter time frames are not ready yet. I don't have any strong signals which I can like really say that go for it, but I think we have 2 more days this week. It should give us a bounce sometime soon. And to end today's discussion on the overall markets, mentorship traders, we do track the markets closely and share our views in our chat. And one stock that we closed today in a loss was Bajaj Finserv. It was a contrarian trade, and we expected a follow-through move. It was struggling. It did give us some move, but not enough at all just to hit our stop loss with this crazy fall. These trades that I'm sharing with you that we discuss in our mentorship community, I'll share with you only once the trades are closed. We have an open position in a stock within the pharmaceuticals pack, expecting some movement soon. But once these trades are closed, I'll be updating you about how good as a community we are managing to trade. Right? Okay, so it's been a long time since I've shared my views on the market. I hope you'll find this useful. Till then, take care of yourselves. Trade well, trade wise.